The latest data on the Chinese economy shows us it's cooling, right?
Well, we are seeing some degree of deceleration in the Chinese economy, which we've been calling for quite some time. But I think the pace of that deceleration is actually quite welcoming in the sense that in the first half we've experienced double-digit growth in the GDP. In the second half we're expecting perhaps down towards 8 to 9% or 9.5%. I think that's much more sustainable. But of course, from a market perspective, that may well be a bit of a worry, given that we're seeing deceleration in growth in US, in Europe, and even China. I think market may not like it as much as they should.
Well, this is the thing. I mean, the big question is what happens next in terms of the government's tightening policies. Can they actually afford to pull back a bit because of the slowdown elsewhere in the world, or is inflation a problem? We saw that CPI number jump up today.
Well, I think the CPI inflation is not our top concern, or should be the government's top concern either. Really, the economic slowdown or moderation, that will give the central bank a lot more room to maintain the current level of monetary policy. In fact, as you see from the lending data, already we're seeing some slowdown in the lending growth as well. So overall, I think the whole moderation process is actually very much in line with what the government wants to see.
What about domestic demand? Because we did see import growth slow, and that kind of spooked the markets yesterday. What can be done to shore up domestic demand?
Well, I think on the consumption side, retail sales, again, the latest number have seen very marginal deceleration. But I think the import side perhaps is more down to the sporadic commodity import. So in that sense, again, I would not interpret 1 month of data with a huge amount of concern. But nonetheless, I think from the rest of Asia, from the rest of the world, China is still providing quite strong support to imports, to demand for the rest of Asia, to the rest of the world. And I think that is unlikely to change in the near term. And therefore, I think China will still be a very important growth driver for the region.
Very quickly, with regards to the stock market, is the slowdown priced in?
I think not yet. I think we're seeing some degree of rebound in the equity markets to some extent around the region. Of course, the news from the Fed is perhaps still the dominant factor, but I think China's slowdown is perhaps not quite priced in just yet.
Tai Hui from Standard Chartered joining us from Singapore.